Many care workers work a lot, juggling irregular shifts, high cost of living, and family responsibilities. And yet most of them are wondering, how can I own a home? Hi and welcome to another episode of Inspire with Chebo. My name is Caroline and my friends call me Chebo. You know that by now. With me today is Mr. Richard Becker, the owner of Vic Mobile Mortgage. Welcome, Mr. Richard.
Hi, Caroline. Thanks for having me.
Yep. And thank you for coming.
Introduce me. My name is Richard Baker. I've been in the industry for close to 19 years, and I've been on my own for the last 12 years. I've got a fair depth of knowledge in it, but my main passion is to teach everybody, especially people who are new to this country, on how you can afford your home. The issue is that when you're paying rent money is dead money. You're paying it and it's gone to somebody else. When you're paying a mortgage, yes, you're paying a mortgage to the bank, but that money is towards your own house, which is very important because a house always increases in value.
Perfect.
It's a growing asset. So talk to me about how I can help you and explain to you that you can afford your own house. Yes, it might be difficult at the beginning, but it'll get easier as you go along.
Now, Richard, you talked about dead money. What does dead money mean?
Dead money is when you're paying money to somebody else for no reason. It's gone to the landlord. Landlord takes it and does whatever they want with it. It's not in your pocket anymore.
How many months of consistent income do banks typically require for someone working in aged care or disability for them to acquire before applying for a home loan?
Minimum of 3 months.
How do banks assess borrowing power for someone who is working in disability and having irregular and fluctuating shifts?
Okay, what the lender checks, how long the income has been coming in from, how consistent is it, and whether it's likely to continue. So contract work, which ends in 12 months, they will look at it and say it's going to end in 12 months. What guarantee that you're going to have the money coming in for the next 12 months to repay the bank? So they're going to look at a lot of factors.
Yep.
Again, they also look at the deposit you have, how much your savings history, your credit score. So a lot of factors are going to play.
What impact does working multiple agencies or shifts do have on loan approval?
That doesn't come into play. So long as you're getting a pay from the companies that you're working for, and it's been more than 3 months, it should be better for you.
That's really good. That's really nice because most of us we work a lot of shifts. A lot of jobs. We juggle jobs to make ends meet.
That's right.
How can a care worker strengthen their application despite income instability?
By showing your savings power, how good you are with savings. The bank will look at your transaction account on your bank statements.
Yep.
They will look at the transactions on a monthly basis and see how much you're spending, whether you're spending on gambling, whether you're spending on alcohol, whether you're spending on tobacco. You can see everything these days. And they will analyze from that whether they can give you the loan or whether you're going to be a risk factor for them.
How can they know my spending? Yet I don't borrow money. I got cash. I got my income. I go to my bank, withdraw and buy something. How can the bank know that?
They'll see the cash coming out. They'll want to know what you're doing with that. Because say, for example, you earn $100,000 a year and your expenses are $50,000.
Yeah.
Where's the other $50,000? That should be in your savings account. But the $50,000 not there, what have you spent it on? They want to know those answers.
What is the realistic deposit amount needed for their first home buyers right now?
Ideally, 10% would be great because that gives you 10% equity in the house to start with. However, you can get away with 5% deposits as well.
Doesn't that then mean like the less money that I pay, the more repayment that I'm gonna?
Absolutely. The less deposit you pay, the more the loan is going to be, higher the repayments are going to be. Then there's also a thing called lender's mortgage insurance, which any loan that is over 80% gets charged by the bank. So you're paying a bank fee of 2.5% nearly, approximately. I've got to work that out. But that's wasted money.
Wow.
But it's pretty complicated, but I've got to work out the lender's mortgage insurance. But it works out over 2.5% of the loan amount. So if it's below 80%, there's no LMI, lender's mortgage insurance.
Okay, LMI is?
Lender's mortgage insurance.
Lender's mortgage insurance. Oh, okay. So for sure, our mortgage, the mortgage that we get, it has to be insured.
We're insuring the bank, you're not insuring yourself.
Oh,
And you're paying the bank.
Against me?
No, you're guaranteeing the bank. You're paying the insurance for the bank.
Okay. Are there pathways to buy with low income deposit?
Yes, there are pathways. The first home guarantee scheme is an incentive by the government to encourage people to buy the first homes, where you put in 5%, the bank will put the other 15%, so the loan is less than 80%. There's no lender's mortgage insurance, LMI, and you're buying out at a pretty affordable price.
What are the risks involved in that?
There are pretty complicated risks involved with that. The main risk is when you sell the house, the government still loans 15% of the sale value. So when you sell the house and you sell it for $1 million, the government will take $150,000 from there.
Wow. Lots of information to learn from you, Richard.
Yeah.
How can care workers manage saving while dealing with high cost of living?
I will help you set a budget. The cost of living will go up. You put a buffer in there where you can guarantee that if it goes up, that you still have the money to afford the school fees, to afford the uniforms, to afford the petrol, to afford the food. We'll make sure in the budget that it all fits in.
What schemes are available for first home buyers?
The first home guarantee scheme is the best scheme going at the moment by the government. Each state has different schemes as well. For example, Victoria has a first homeowners grant. It's only for houses that have not been occupied before. So brand new house, they will give you $10,000 cash, and they will give you no stamp duty. Stamp duty is nearly 5% of the cost. So that if there's no stamp duty, then you're saving 5%, which is quite a lot.
That's good. That's good. So, because I remember even with myself when we were applying for my loan, I got first home buyers.
That's right.
So, and this applies only for people who are buying for the first time, not somebody who has.
Right.
Oh, okay, that's good. What types of home loans are best suited for people with variable income? Is there, like, if I have an income of, let's say, today I'm earning 2,000, next fortnight I'm earning 1,000. Is there specific?
The banks will annualize income based on that.
Okay.
The banks will work out and annualize, and I'll do that for you as well.
Yeah.
Is our annualized income to see how much the annual income is, and we work on that.
So it doesn't matter.
Doesn't matter whether it goes up or down.
Oh, good.
Because you're working shifts, sometimes you work overtime, sometimes you don't work overtime. So the pay scale goes up, but then we annualize it over 12 months, and we get a picture of how much you can use.
That's great to understand. Would a fixed or variable interest rate be safer for someone in casual role?
Again, it depends on the circumstances. I've got to work out each individual case. Variable is if you can afford to have principal and interest. Because the interest rates are very volatile at the moment. It went up once already. They say it's going to go up another 2 times in May and again in September. But we can't tell the future.
Yeah.
So if you want to secure yourself, I would suggest fix it for 1 year or 2 years. Because that's where you're guaranteed for 1 year, 12 months. If the repayments are $1,500 a month, it'll stay $1,500 every month. If it's variable, the repayments can go up to $1,700 or $1,800 per month. But this way, when you fix it, it's the same for 12 months.
What I get is, if you fix your loan, stay with the amount of time that loan is fixed.
That's right.
If you change your mind during midway, then there are penalties to pay, correct?
Then the bank will charge you a penalty.
Should care workers share a home loan with a partner or a friend?
Definitely. I would prefer partners. Friends, you don't know what the situation is. It can change suddenly. But with a partner, spouse, yes, because you have 2 incomes to work with.
Yeah.
You know? So the borrowing capacity goes right up.
How important is having a financial buffer or emergency fund before applying for a home?
Absolutely important. As I said, even while you have the loan, you have things like offset account.
Yeah.
You have things like redraw, where you can save money by paying a little extra, but you're bringing down the home loan. But that's your emergency backup.
Yeah.
If you need the cash, it's always readily available that you can take it out and put it towards the emergency.
I want to ask a question adjacent to that. In my offset account, they tell me, this is the amount you can redraw.
Yeah.
What does that mean?
That means the money, you have paid extra money towards the home loan. So it's bringing down the home loan faster, but the money is sitting there. For example, if your home loan is $100,000 and you have $10,000 in your offset, then the interest you're paying is only $90,000, not $100,000.
Okay.
But anytime you want, you can take that money out, the $10,000. then the loan goes back up to 100,000.
Jeez. So it means then if I take out that money, I'm increasing expenses for myself.
That's right. But it may be an emergency that you need the money.
True. All right. Every case depends on you. What areas are currently affordable and realistic to buy a home?
It's very difficult to say. Some areas are overpriced. So you have to look at what you can afford. And I always tell people, don't go to buy a palace. Take small steps. You know, now you want to get out of the rent, stop paying rent, and buy your own house. Once, you know, you got 2 kids, the two adults, buy a 3-bedroom house. 3 bedrooms, 2 bathrooms, a garage. It might cost you 600,000 now, but you get all the grants because there's a cap on the ceiling on all the grants.
Yeah.
If you, after 2 or 3 years, you might sell this house and then have the deposit for a bigger house.
And this is another question that comes into that. Is it okay or is it better to buy an investment property or primary residence?
It depends again how much rent you're paying. And again, I have to work that out for you and see whether it's feasible buying an investment property and renting it out, how much rent you're going to get in that area.
Yeah.
And it's going to pay the loan. So you're not, but then how much rent you're paying and wasting the money every month.
Yeah.
So that has to be weighed up. And we have to really look at it closely.
So to me, I don't know, it depends on everybody's situation. I don't see the reason why I should buy an investment while I'm renting.
No, that's right. I say first buy your own occupied property, then maybe rent it out and buy a bigger house after 3 or 4 years.
Are there emerging suburbs right now where care workers can buy?
It depends how close you are to work. That's very important, is that you're close to work. There are 3 things when you buy a house. Station, school, shops. So you be close to transport, be close to schools, and be close to shops. And also close to your work. You don't have to drive far, or you're stressed out in the night, driving in the night because you're working shifts.
Yeah.
Close to school so the kids can go easily. Close to shops so that you can shop easily. And close to public transport. And that's very important because if you want to rent the house out in the future, people are looking for those same things when they rent.
Yeah. And also affordability.
That's right.
Yeah. What risks should a care worker be aware of before committing to a mortgage?
Your main issue is that you have to look at whether you can afford it. And they're not going to be stressed out. You don't want, work is stressing enough.
Absolutely.
You don't want to be stressed out with the home loan.
100%. Yeah. How can someone protect themselves if their hours drop or employment changes?
Again, the banks are very considerate. They give you options. But again, give me a call or give the bank a call and discuss it with them. Be upfront with what the problem is.
Yeah.
And they will always be there to help you.
Now, what happens if a borrower can't meet repayment due to inconsistency with work?
The bank will offer you what they call a honeymoon period, where you can lay off for 3 months or 6 months and not have any repayments for that, and then start again. But unfortunately, that goes on your credit score and brings the credit score down.
Wow. What are the top 3 things a care worker should do in the next 12 months in order to be ready for a home loan?
Save.
Correct.
And talk to me.
And talk to Richard.
Yeah.
How important is credit score and how can it be improved quickly?
Don't have credit cards. Be very consistent with your repayments, your rent, your credit card repayments, your car loan repayments. Be very consistent. Don't miss out on anything. Phone bills, electricity bills, everything goes against credit score.
Is it better to have a mortgage broker or better to go to a bank?
I would say, not because I'm a mortgage broker, but mortgage brokers are more open to a lot of different lenders. For example, I can deal with 32 different lenders.
Yeah.
All the major banks, all the smaller banks, and private lenders as well. So when I shop around for you, I'm going to get you the best rate that's going in the market out of 32 people. If you go to a bank, they're only going to offer you one rate, what they offer.
Wow. Because of course everybody promotes themselves.
That's right.
If you feel like you want to talk about how to own a home or how to apply for a loan, Richard is here. Get in touch with him. Thank you so much.
Thanks, Caroline.
You're welcome. If this episode resonated with you, don't forget to subscribe, like, and share to support information, provision, and education for frontline care workers.